Hi guys, it's Any aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Today is Wednesday the 22nd of May 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into it. Now you know what I'm going to ask you to do next. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you click that description section below, I've got a link to my mailing list. If you join my mailing list, you get priority access to my free training course that I'm creating for beginner traders. You also get weekly emails of straight into your inbox of all my latest videos. And you also get a spreadsheet that I give everyone that has all my entries, my exits, my stop losses, and the reason behind my trades if you want to check that out. So just join my mailing list below. Let's get straight into the video. So I've got one UK stock and 4 US stocks today to cover. You can see this smile on my face. You'll know why in a second. The first UK stock is SLA. And so it double bottomed. So see, this is why you have to have your nerves intact. If you watched my last couple of videos, you saw me getting annoyed that it wasn't going my way, and then all of a sudden it starts bouncing back. If I'd held my position, held my nerve, then I would have not closed out my position and made a bit of money. But this is learning curve, as you said. The technical side of trading is easy to learn. Once you watch enough videos, you can start to see the patterns that I recognize. It's easy to get that. The hard part, the part that I'm even still learning how to do, is the psychological side. When things ain't going your way, are you going to hold your position and fight through, or are you going to close out and then it'll end up going your way later on? Or it's just about risk management and knowing how to control your emotions. And that's a journey I'm still on, as you can see from my last couple of videos where I closed out on my position in CRON. But yeah, so it double bottomed on the 180-day simple moving average, and now it's starting to climb. So it looks like it's gonna do what I expected it to do originally, which is climb and start making new highs. This would be a great position to enter. Now would be a great time to enter this position, because you could let me get the fibonacci. You could potentially see, look, it's respecting this fibonacci so much that you could potentially, look, it's climbed up, it made a bed at the 61.8 mark, climbed up, made a double bottom bed at the 38.2 mark, and this is what we call confluence. Lots of the different indicators all telling you the same thing. There's a double bottom here on the daily chart. The 180-day simple moving average is acting as a bed, a support for the price. Price is rising, and there's also respecting the key levels at the Fibonacci. So these are all telling me the same thing, that this is a long. So this is a long position, and you probably set the stop loss just underneath this double bottom, and you can just ride it up to maybe even 300. This is where I'd ride it up to next. The next level of the next Fibonacci level, which would be 300, or yeah, 30 pounds, 300. I'm not sure. I'll check out the price, but yeah. So this would be the next level to ride up to, and this is where I'd make my take profit at. So this would be a great position to enter. And if you look at this, from where it is now, you're risking 9 pips to make a potential 30 pips. So that's what's that, 6 to 1, 7 to 1? That's a great risk to reward ratio. Well worth the risk. The next one is the US stock CRON. Now, if you've watched all my other videos, you've probably well documented my saga with CRON. I've had ups, I've had downs. I entered this position. I initially entered this position at 15. I exited for a loss. I entered again here. I exited for a loss because I couldn't control my nerve. I knew what I saw. I saw a descending wedge pattern, and I just didn't hold my nerve. It double bottomed on top of this 180-day simple moving average, and it broke out. But luckily enough, upon the market open today, I entered a position. I entered a big position, and I'm currently at the time of recording, I think I'm up £90, which is good, because I entered a position bigger than the positions I entered the last 2 times, because I was pretty confident it was going to break out now. I just didn't hold my nerve. I saw it fluctuating. It double bottomed here, and I wanted it to break out straight away. It didn't break out straight away. some of these moves take time to build, and I was very impatient the last two times. So let that be a lesson to you guys as well watching my trades. Sometimes, if the technicals are telling you something, sometimes you just, like, I set my stop loss to $14. It hadn't even hit my stop loss, but I just exited my position. If I left my stop loss where it was, I would have gone down, it would have come up, and then I wouldn't have had to exit my position to lose £31 yesterday. I've made that back and some, but I still think it's gonna go up even further. And the way what I'm looking for now is that I think price will probably carry on tomorrow or the rest of the week up until this line here, and then it might treat this as a little bit of a resistance. So I might take profit here, and then when it retraces, re-enter again, so I can climb, so I can just maximize as much profit as I can. But so far so good. I like what I see. It's probably gonna level out tomorrow because it's made a huge gain today, but it's onwards and upwards for CRON. I finally feel vindicated. I've been talking about this stock for a while. I made it my my pick of the month, and I thought I was gonna have to post a loss of my pick of the month, but it's finally doing what I wanted it to do. And another sign of confluence as well. Descending wedge pattern breaks the upside, so it's a bullish move. 180-day simple moving average acting as a support. Price kind of double bottoming under 180-day simple moving average, and the $14 mark acting as a key support line. So all of this is letting me know that this looks like a bullish move. As I said, I'm gonna wait for it to hit this line here and then see whether it treats it as a resistance. And if it does, I might exit my position here just so that it can retrace back down. I can re-enter at a lower point so I can maximize profit. If that makes sense, guys. So now I'm on to UA. This is one that was suggested by Demola, Under Armour. So on the daily chart, straight away, what do I see on the daily chart? So it looks like this is the first time I'm looking at it, by the way, guys. I think there's like a support line here. What else is there? There's a trend line. Is there a trend line here? Yeah, there is one here. Don't know if that's relevant right now, but I'll plot it anyway. Is that relevant? We'll see. Don't know how relevant that is. I'll delete that. Okay, so on the daily chart, looks like it's hit this resistance line a couple times, and it's retraced back down. So it might do that again. Let me look at the weekly chart first. Weekly chart. Okay, so this looks interesting. Looks like it's about to hit the 180-day simple moving average on the weekly chart. So it could do one of two things. It could treat it as a resistance and then bounce back down, or it could break through it. Given that the 180-day simple moving average on the weekly chart is curving down, I'd be more inclined to think that it would go back down, because 180-day simple moving average, as we all know, is a sign of how price is moving in the long run. And right now, this one looks like it's curving down, so price looks like it'll be curving down in the long run. On the daily, the 180-day simple moving average kind of does the opposite. It's acting as a support, so they're saying conflicting things on the weekly and the daily chart. So I don't know really what to do with that information. It's acting as a support here. So wait, I'll just put some sell points. What I would do. Okay, let me go to the 4-hour chart now. 4-hour chart doesn't really tell me much. What I would do is I'd wait for it to hit the resistance line. I'll set an alert, actually. Set an alert on this line. You can play it two ways. You can either set an alert on this line. When it hits this line, short it and set a stop loss just above. And if it hits the stop loss, then you just have to chalk it up to the game. But if you short it, then you'll have a nice risk to reward, because it will probably retrace back straight away. And the way you want to short it to, you probably want to short it to wherever the 180-day simple moving average is, because it's acted as a support on the daily chart 3-4 times. So you can kind of predict that it might do it again. But as it stands, this probably wouldn't be a trade I would take, because it looks like a high risk trade. the 180 simple moving average is telling me two different things on the daily and the weekly chart, and I don't like that. But if you wanted to do a trade that would could potentially get stopped out for a loss, but if it goes your way, you can make a big profit. I'll wait for it to hit this line, short it when it hits this line, and then set my stop loss just a little bit above this line. And then if it sells off, then you can just bring your stop loss down to a positive territory, so that it'll be a green position whatever you do, if that makes sense. Next one is Netflix. Another call out by one of our subscribers. I'm loving that I'm getting more interaction with the subscribers now, getting a lot of more engagement. I like it. Comments section looks kind of empty in some of the videos, but I'm getting a lot of engagement now, which I like. So with Netflix, on the weekly doesn't really tell me much. On the daily, prices underneath the 188 simple moving average. Let me see what the MACD and RSI is not really telling me much. You could draw a support line here. Kind of. You could draw a line here. Let me go to the 4-hour chart. Okay, here we go. Let me delete this line. I don't think this line is really relevant. Let me see if this line has a parallel. There we go. See, look. So it looks like there's a little bit of an ascending channel pattern. I wouldn't really call it a channel pattern because it's not really. But on the 4-hour chart, there's a little bit of a channel pattern, if you could call it that. It's not really that strong, but it could work. As it stands, it looks like, from what I looked, it's double bottomed here, so I could safely say that I think it might go up. Once again, this isn't the type of trade that I would enter because the channel pattern is not really clean. It's hit the resistance more times, it's hit the support, so and it's broken out a couple times, so it's not the cleanest channel pattern. So it's not something I would trade, but if I was to make a prediction, I would say that it would probably rise to the resistance line. So that would be, but I wouldn't enter this trade because, so that's 3,000 pips you can gain, and 1.5, about 2,000 you can lose. 1,000, so that's a 1 to 1.5. That's a 1.5 risk to reward. It's not good enough for me. Yeah, I wouldn't like that because you're pretty much halfway through the channels. So if it goes against you, you can lose quite a lot, and what you'll be gaining will be about just a little bit just above the same as what you can lose. So if we were at the support line, I'll probably be more audacious and probably enter the trade for a long position because you can set a tight stop loss. So if you're wrong, it'll only be a small loss. But because of the position in the channel pattern that the price is, I wouldn't enter this trade right now. Yeah, that's what I'd do. Anyway, aka the Noctrader, signing out.